What's up, everybody? Welcome to Bullish Rippers. This is Evan, better known as Stock Market News on Twitter. Every Monday at 9:20 a.m. Eastern and Friday at 4 p.m., myself and my co-host, Wolf_Financial, also known as Gav, put on these spaces to help you guys get ready for the week ahead in the market and then get caught up on the week just passed. Our goal is to educate, inform, and hopefully entertain you guys a little bit. We really appreciate you tuning in, and I hope you enjoy. Dude, we got a bunch of people coming here. I messaged Brad, Danny, Stock Talk, and Gergavin are all supposed to be coming into the spaces. So we should have a stacked panel, but unfortunately, we're missing a bunch of them at the start. But no worries, they'll get in here eventually. I'm gonna put out the tweet. But Gav, can we start with you a little bit? How was your week in the market? I know obviously there's only one really direction it could go.
Yeah, pretty bad. Pretty bad. Let's take a look. Our growth portfolio finished down 10% this week. Yeah, just not pretty, you know. The week went okay for Monday, Tuesday, we're fine. And then Wednesday, yeah, I don't know. Just not pretty, you know. There was a mixture of getting hit from the sides of both, you know, Bitcoin and Ethereum, which we saw fall pretty hard. Ethereum falling under 3K continually, Bitcoin under 40, and obviously those are large positions in that growth portfolio. A lot of the names in that portfolio also set new 52-week lows, so I'm pretty heavy in things like SE, Celsius, Square. I mean, SE and Square are two of my largest positions, and they basically set new 52-week lows every single day this week. So that was just bound to be pretty bad. What else got hit? I mean, a few other positions. I really just didn't trade too much this week, to be honest. Like, I got out of some stuff that I thought was going to keep going down. And I really just kind of played around like SARK, SARK, which obviously had a pretty great week. I think it was up like 7 or 8%. And so just looking at that, I eyed more puts and stuff. But again, this week's been a little bit tough for me trading wise because one, CST. Like I really hate CST. I'm glad to be out of it tomorrow. I'm getting out of CST. And number two, I think, I'm looking forward to Monday. I want to see which direction this market kind of pushes on Monday because if it starts going lower on Monday, I don't think we're finding that bounce right off the bat. Like we broke through 200-day moving averages on, key indices. I think if it starts going down on Monday, I will load up on puts, SARK and some things in those areas. And then conversely, if we do see that bounce, that would be, nice to see incoming and may take some teasers. But I think we just need to see a few green days in a row to really think that, there is going to be that bounce. To be honest, in times like this, I probably have just spent less time on my portfolio than usual. I think some people are really good at playing downside, right? They're great with puts. They have their triggers in place. They have discipline. They get in, they get out. It's not something that I'm an expert at. I have played downside before. I wish I was better at it, and it's something that I'm learning about. I think it's naturally more easy and, inclined to play upside. So we're just going to see where it comes out with. But that was a week in the market, just not pleasant, obviously, overall. Hopefully better days ahead. But with this economy and the current state that it's in, I wish I could say that I expected better days. But at the same time, I plan on moving a decent sum of money into crypto staking this weekend at 19.5% APY. That's something where I know I can get that guaranteed return. And, once the market starts showing a little bit of, a few days in a row of strength, something retakes its key average, I'll probably edge into some positions, but I don't want to just throw money in that's going to be gone, a few days later.
Awesome. You do appreciate the week in the market, dude. I said dude twice there. I hate that. But I've been trying to do some stuff as well. I added a little bit to one of my fixed income names that I know a little bit more. What kind of fixed income? QYLD, which we talked a little bit about before. Maybe this is the first time you hear it. I wouldn't say go buy it right now, but maybe you do a quick Google search into it. But I'll keep us cycling around with all the people that we have up here. Stock Talk, I see you joined us in. How was your week in the market, man?
It was up and down for sure. There were definitely some big wins earlier in the week, and then there was some chop that I got caught in, getting a little over ambitious trying to predict price action. I got caught in a little chop at the end of the week, but overall things worked out pretty well. I was net green on the week, which I didn't expect to be, considering how much of a beating a lot of my long-term positions took. But that's the benefit of hedging. Today I was short BidF, short Cores, CORZ, which is a new D-SPAC. It was a Bitcoin mining D-SPAC. It traded down 22% today. The puts absolutely printed. The riskiest, furthest out of the money puts I had were up like 340% at the end of the day in just a session and a half, really. And so those were really great. But so there were some monster trades like that in between, and then there was some chop that I got caught in. I got caught in the chop on my Lucid puts that expired today. Those ended up expiring worthless. Thankfully, I spread out that position and didn't concentrate it. I put 30. I initially had 30% of my position in the 121 puts expiring today, and I had 70% of my position in the 128 puts expiring on Friday. We got a dump in Lucid the day before the unlock, which I didn't expect. I thought we would get a rally into the unlock and then a dump. Always hard to predict that, but we got kind of an early dump, which I sold 20. I talked about in my Discord. Obviously didn't tweet it, but the Discord I talked about how I trimmed 20% of the 121 calls when they were up about 163% when Lucid dropped that day. I wish I had sold more of them because, like I said, they expired worthless. So took a loss on that part of the position, but the overall position is still very net green because the 128s and the February puts did very well. So yeah, I mean, I'm playing a lot more puts than I normally do, to be honest, but I'm not trying to fight the market trend. For me, it's like this is a situation where, there's stocks can't catch a bid, right? You're seeing every pop getting faded. And so when I see a market where it doesn't look like there's a lot of liquidity, not a lot of volume, not a lot of bids, I'm really looking to play downside more than upside. And when things change and I see a convincing reversal in a lot of these names, then I'll start getting my long bias on again. But I'd really try not to let like the attitude of the market affect my ability to trade. I always get really frustrated even when I hear people on Twitter saying like, "Oh, the market sucks. Like I'm getting screwed over." Like, don't whine, get short. You know what I mean? Like there's two ways to play the market. And so I just think not enough people like it seems like such an obvious thing to say to somebody like, "Hey, the same way you're buying equity and buying calls, you can short equity and buy puts as well, right? And you can do other things like selling covered calls, which is technically bearish because you're shorting a call. And there's other strategies as well, but there's a number of ways to get exposure on both sides. And I think people who are noticing that in this market have been doing well. Like, there's a lot of people in my Discord that I've been kind of, talking with and trying to help out. And a lot of them have never, ever played puts before. And they played their first puts. Like, the first play I alerted in my Discord on the new year was to short the Bitcoin miners because Bitcoin gave up 50K with volume, which was my trigger level, which was, hey, Bitcoin falls under 50K with volume, especially if it goes under that 48K level, which it did 2 days later. We were looking to swing those shorts. We swung them down all the way down to a drop to 43K in Bitcoin. I mean, some of these puts, I didn't hold them through the whole cycle, which I wish I would have. But if you had held some of these puts through the whole cycle, they'd be up like 800-900% in a matter of a couple of weeks. So, there are definitely high upside plays if you're willing to look and if you're willing to kind of, like I always say, put that bull bias away. The market is meant to be played on both sides. Most of the people I think that lose, large amounts of money, like I posted a tweet or a screenshot of a text today from one of my real life friends who called me about an hour ago. And he basically was like, dude, I feel like I have to quit. And, I asked him what was up and he was like, my portfolio's down like 36% in like 2 months. And obviously he's a newer trader and, there's risk management strategies he needs to employ and there's mistakes he made. But, largely what it was that, he was trying to be, too pigeonholed to one style. He was just all he was doing, his whole portfolio was exposed to deep in the money leaps that he bought months ago, didn't roll them out, didn't trim them when they were up, just held them indefinitely because they still have about almost a year, I think a little bit more till expiry. But he got slaughtered on them because he was, he had these on stocks like Upstart, Marqeta, stocks that he thought were, and are high quality companies, but have come down so much off the highs that he got slaughtered because those in the money, or quote unquote deep in the money calls that he thought he was buying, are now out of the money. Like he was buying 200 250 calls on Upstart when it was trading near 400. Those are way out of the money now. And so he took what he thought was a safer position, according to the videos he had seen in the self-education he had done. And, now he's down. I mean, he's done very well in his professional career and just started trading last year, and he's down hundreds of thousands of dollars now. And he's still a young guy, so it's a lot of money for him. And, I feel bad. Obviously I can't hold all my friends' hands while they're trading either. I try to help where I can, but it's sad to see this kind of stuff because I really think a lot of it is just psychology. A lot of it is individual investors and traders falling into that psychological trap of, it's either habit, for a lot of people it's habit. Just they've been trading long for most of their careers and that's what they do. And that's how they feel like people compound and make money. And, anytime stocks are going down, they just kind of become a passive participant. And, some people will be like, oh, adding dips, that's considered active. Like, sure, but is it considered participative? Not really, because to me, to be truly participative in the market, if you're trying to make money, which I hope, I understand ethical investing and all of those things as well, putting those aside, I hope your main goal in the market is to make money, because if it isn't, you're going to have a tough time staying alive really in the game. Longevity in the game is about preserving capital. Every single person on earth, whether you have $50 million or $50, you have a limited amount of capital to allocate. Yeah, you can use margin. Yeah, you can use things like that. And there's other ways to get exposure, but you have a limited amount of capital. And so every dollar you're spending should be put into the best opportunity cost. If you're, buying in the money leaps on stocks you love that you feel like are far enough out that they're not going to suffer, well, if they go from deep in the money to deep out of the money, they are going to suffer regardless of how long dated they are. And so, yeah, there's just a lot of it troubles me. And, maybe it does trouble me from the perspective of, I feel like it's obvious, but then, I look in hindsight and I think about how I was when I started trading, and, I made the same mistake. So, I'm not mocking anyone or trying to judge anyone's trading or investing strategy. What I am trying to do is really emphasize the point that, like, stocks go in two directions. So why on earth wouldn't you play them in two directions? It just, to me, it kind of, like, I always make the NBA analogy. It's like the players who, play, they might be great shooters, but they can't play a lick of defense. Like, how long do those guys last on the floor? They always get pulled out in those tight fourth quarter situations. They're never playing in key playoff moments, because you need to play both sides of the court for longevity. You need to play both sides of the court for consistency, more importantly. And do stocks generally trend up in the very long term? Yes, because equity markets are one of the best ways to get return on your investment, and they always will be, in my opinion. And so stocks in the very long term will trend up. But that just means that the stock market will trend up. I always say, when people say the phrase stocks go up, I'm like, yeah, that's true, but it's actually phrased wrong. It should be indexes go up. And the constituents of those indexes may do all sorts of things, right? Like having the belief that you're buying into a stock and thinking, oh, you know what? The S&P 500 always recovers. Yes, you're right. The S&P 500 always recovers, but that doesn't mean that your individual stock within the S&P 500 will recover. And that's why you have such a massive turnover in equities. Like, go back the last 10 years, there are thousands of companies, tens of thousands of companies that were perceived, that IPO'd under a great limelight, that IPO'd in a situation where they had amazing growth, they had intellectual property moats, technology moats, they had a strong control of their competitive environment. They were driving, customer acquisition, increasing business incrementally, and then boom, the competitive landscape changes. Maybe a new product gets introduced. Maybe an alternative industry opens up that steals business and market share from an existing industry. Maybe there's government headwinds where you see a deregulation or increased regulation in an industry. Maybe there's international geopolitical tensions that affect a sector. There's so many variables. And so, bringing yourself into the illusion that, you can just passively participate in the market and not care about the intraday volatility, which is another thing that I hate seeing. Everybody say, oh, I don't care about the intraday volatility. I'm not a trader, or I don't care about the intraday volatility. I'm only a day trader, or whatever. It goes both ways. It's not just investors that are saying it. And, if you're, again, I'll emphasize, if you are looking at the markets every single day, which most of you are, most of you who come and tune into these Twitter spaces, you check your portfolio at least once a day. I mean, considering that most of people's portfolios are on their phones now, most people, even if they're at work, are checking their portfolio at least once a day. If you're checking your portfolio, how much more effort is it to click a few buttons? And, I think that crux of psychological understanding will really improve people's, mentality here. Like seeing people whose ports are down 15% in a day, 40% in a week, like, what are you doing? You're either massively overexposed on one side with no hedges. You're either holding positions too long. You're either getting greedy. You're either taking, high risk setups that you don't know enough about. You're either trading stocks that you have no idea about. There's could be any number of errors that you're making, but if you're finding that you're massively underperforming the market, like, today people felt like the market absolutely dumped, and it did, but individual names dumped. QQQs is being down 3% for an index bad? Yeah, but the Qs closed down 2.75%, whereas so many stocks closed down 20, 30, 35%. Those are massive downside moves in individual names. And it's because you cannot depend on the indexes. And if you are looking at the indexes and you're like, wow, it was a down day, SPY was down 1.8%, NASDAQ was down 2.8%, but my stocks were down, double digits. My portfolio as a whole is down double digits. If that is happening to you, you must refine your strategy. You must. And I don't care if you're a trader or an investor. And again, I know I shouldn't say you must, because none of this is financial advice. It's just me being vehement about my opinion. But, if you're just a passive watcher of your stocks going up and down and up and down and up and down, you're wasting opportunity costs there alone. You're not using optionality to benefit from the volatility, which you can do on both sides of the ball. You're not exploring rotating your positions to get better exposures based on what the market prefers at what time, because the market is always going to do that every year. It's going to have cyclical rotations. It's going to have risk on, risk off rotations. If you can't somewhat participate, and I'm not saying buy and sell all of your stocks every day. I'm not saying go cash at the end of every day. I'm not saying rotate your whole portfolio every week. I'm just saying that make some moves to accommodate the trends that you think are obvious. And I'm so emphatic about this today because I've spoken to like 30 different traders today that got absolutely slaughtered. Like, somebody sent me a DM of a $600,000 loss on a day. That troubles me. It shows like a lack of education primarily, but also a lack of willingness to be flexible. Too many people are being bystanders with their own money. And I just can't really understand that at this stage of my career. But when I was younger, I mean, I totally get that. I did the same thing. It's just like, I encourage people to learn from the mistakes of, whether it's the people you follow on Twitter that you might admire or respect their ideas, or whether it's a mentor you have in your real life, or whether it's, somebody just indirectly that's been trading stocks for a long time, whatever it may be. Don't, the illusion that you need to put yourself through the errors to be better is partially true at times, but I don't think it's entirely true in stocks. Like, I've blown up accounts before when I was, I grew a very small amount of money when I was 18 into a very large amount of money when I was 23, and I blew it all up when I was 24, and I had to rebuild it all. And so I learned that lesson firsthand, and it taught me, like, I started off as purely an investor. That's all I did. I invested and I DCA'd, and then when my positions got to exorbitant gains, I trimmed and sold. And it worked for me for a few years. But then when I got into a more bearish market, a market where you had these aggressive selling phenomenons underneath the indexes, I realized God, I'm wasting so much opportunity cost by not having a massive amount of capital to pursue these opportunities, which requires me to constantly rotate my money. And so, yeah, I mean, just I know I went on a huge rant there, but it's just been bothering me today because I've been seeing a lot of people lose a lot of money, and it upsets me because there are people that have been trading in a lot of cases for several years, and it really feels like there's a barrier psychologically for a lot of people learning from their mistakes. They go through these same mistakes every 3 months, and then wonder why at the end of the year they're flat or down on the year. And so, yeah, just use tools and use education and be flexible.
No, dude, I really do appreciate that. And honestly, it's that type of week where, a lot of investors, a lot of traders really need that stuff. And what I found is the most valuable thing on social media, and what tends to happen is everyone tends to get one way, whether it's too overexcited or too, bearish, panic, everything like that. And a lot of the times you really need that force to bring you back in the middle and kind of take the lesson out of it so you can earn for the long term. Definitely do love that. And yeah, I definitely want to come back to stock talk in a little bit, and we'll get a little bit more into the market and the week. But I want to keep us
One
moving.
last closing
Yep,
sentence
go.
I want to say, though, Evan, really quick before you go to the other speakers, which I do want to hear from Brad, especially, and from Joe as well. And I see Danny just came up here. But one thing I want to say is a lot of people will tell you that 90% of traders fail. In reality, 90% of traders quit. And making that distinction, I think, is important in times like this where so many of you are stuck on the same strategy and seeing these drawdowns every 3 months, and not really benefiting from the volatility. Don't quit. And granted, there's exceptions to that. If you're in a financial situation where you can no longer participate, I completely understand that. But if you're dealing with money that you can afford to continue to try to grow, manage your risk more tightly. Don't let those bags grow, and just try to learn from your mistakes. And Danny often talks about this. Keep a journal if you have to, and then track your trades, see what you did wrong on every trade. Do the work, because especially on FinTwit, we're so used to this notion that people can spoon feed and get away with it. You might be able to get away with it for a year. You might be able to get away with it for 2 years. But in the long term, you will not learn how to trade. You won't know how to trade on your own if all you do is just borrow people's ideas blindly over and over again.
Awesome stock talk. I really appreciate the fundamentals and the thoughts there. Definitely always love when you cut in. So no worries about that. Appreciate you, stock talk. Excited to get more of the thoughts on it. But this is definitely the type of week where we need that stuff and we need those thoughts. So definitely appreciate you as always. But with that, I'm going to keep us moving and throw it over to Brad. I would love to get your intro into how your week was in the market. Honestly, if you want to go into, how you're feeling and really kind of the crux of everything, would totally love that here. But yeah, love to hear from you.
Yeah, so I approach things pretty differently from Stock Talk Weekly, but we also have like a lot of the same kind of core themes in how we kind of approach position building. So for me, it's no options, it's long only, it's no margin, so long common equity only. Kind of what I do is use the really fun times that we had in 2020 and earlier parts of 2021 to not to liquidate anything, but to raise 5 to 10 to 15, 20% of cash from a position to kind of leave myself with more flexibility and leeway to kind of accumulate more aggressively and be more opportunistic when for lack of a better term, when shit hits the fan in growth stock land, like it has in the last few months. So in order for me to have kind of that flexibility and that leeway, I need to first of all, I need to trim when things are getting really good. And second of all, I need to accumulate and add extremely slowly. But kind of before or as as charts break down and as we get more compelling risk reward and as we get more multiple compression, it can be extremely tempting to look at a position and say, wow, I liked it at 60 times earnings. Now it's at 45 times earnings. So that must be it. I must be right, and time to go all in. I really try to avoid that sentiment and embrace the idea that whatever is low can go lower and whatever is high can go higher. And really try to just respect the fact that I'm not super skilled at market timing and at bottom timing. But what I can do and what I tweeted about earlier today is I can I can slowly accumulate as this and I'm going to sound redundant now, but as this multiple compression and as this risk reward becomes more and more and more favorable. So really, I mean, every part of me wants to take my roughly 15% cash position and just put it all in right now, because I love every single company that I own, and because the multiples are that much more compelling that they were 6 months ago and a year ago. But it's forcing myself to deploy cash in basis points at a time, instead of in 15% increments at a time, because the macroeconomic backdrop is so uncertain right now. And while I think it's going to become a lot more certain throughout the year, I could always be wrong there as well, and just respecting that as well. But at the same time, there does come a point where the ads start to become a little bit more aggressive, and where sorry, Stock Talk Weekly just messaged me, so I'm gonna try to not get distracted, because I like to listen when he tells me things. But lost my train of thought. What was I just talking about? Yeah, I don't really know.
You were talking about wanting to go all in kind of right now.
Oh, right. Thank you very much. I appreciate the assist. So, I mean, when we're looking at some of these names now, 40, 50, 60% off of all-time highs, and just ignoring the charts for a second, and ignoring how long or how broken they are, and how long it might take them to recover, and enjoying the fact that I have this long time horizon, and that I don't need it. I don't need a time of bottom, and I don't need it to turn around in a month. When I'm seeing a company like Upstart trading for 22 or 23 times this year's earnings, that I think it's going to do in a 25 to 30% compounder. And to me, that just spells time to get aggressive, time to kind of speed up the basis point accumulation, and time to sink my teeth in a little bit more. And I will say, because I brought up Upstart, their new issue report, people were kind of bringing up red flags or yellow flags or whatever you want to call it, about rising delinquency rates in some of their most recent new issuances, and both in securitizations and for pass-throughs. What I will say is that the company told us this was going to happen, and told us that it was modeled into their 2022 guidance, because stimulus checks are now wearing off. So people aren't as flush with cash, and of course delinquency rates are going to rise. The other thing I'll say is that if you look at their most recent pass-through pass-through trust transactions, and then securitization transactions, the most recent four are all below, or have all more than returned to their overall trend. So just a little qualitative information, or quantitative, I guess, information there about Upstart. But yeah, just respecting the fact that I don't know where the bottom is, and committing to the fact that I'm going to accumulate extremely slowly and extremely carefully, as I've said now 4 times, risk reward becomes more and more favorable.
I appreciate that, Brad. Did you do any buying this week at all?
Yeah. So Tuesday, I actually started a new position in PayPal, and there's a recording, I think, from a Spaces we did on Tuesday, so I won't get into the reasoning there, but it'll be. I gave a brief synopsis and blurb on the investment thesis in my News of the Week post that'll be out tomorrow. But other than that, the only name that I added to today was Upstart. So, and it was a small ad. So yeah, just going pretty slow, and I'm at, I think, 14 point something percent cash. I'm not at my computer to know the exact amount right now, but yeah, still going slow, but starting to approach that level where, like I said in a tweet today, the ads are going to start getting more aggressive and more rapid.
Yeah, I definitely kind of started to pick up a little bit towards the end of the week. I did some buying into the close, but I want to ask a little bit about that cash position as well. What is your typical cash range normally, or what do you feel comfortable with? Do you have that?
Yeah, so great question. So the range, and I never really get. I mean, March 2020, I got to the minimum, and other than that, I've never gotten to the low benchmark or the high benchmark really. But it really ranges from 5 to 20%. So as we get the 2020 recoveries, and as I have a position like Lemonade that goes from, I don't even know where it IPO'd, like 40 or 50 bucks a share to 180 without, and then that was pure multiple expansion. There was no real fundamental improvement to speak of. So when all of that multiple expansion to kind of juxtapose with multiple compression, getting excited and adding into it, when all that multiple expansion happens, that's really when I'm trimming, and that's really when the cash position is ballooning to closer to 20%. It usually kind of tops out around 16, 17, 18. And then it usually bottoms out, and it hasn't gotten this low since March 2020, but it usually bottoms out around 6 or 7%. But willing to go, I mean, honestly, willing to go all the way to 0%. But I did get definitely got a little bit lucky in March 2020, getting down to that 5% minimum, actually a little bit below it, and then having Jerome Powell kind of step in and save the day. So thank you, Jerome, for 2020. But yeah, that kind of gives a brief overview of how I handle cash position.
Yeah, shout out Jerome for that 2020 bounce. It was nice back in the day. It's a good opportunity, but we'll keep talking about this week, which actually I saw some stat that this was the worst percentage week for the S&P 500 since March 2020, I believe, was what I saw. I believe it was the worst for the Dow Jones since October 2020, and then the NASDAQ might have been like June 2021 was what I think I saw. But definitely a red week. I really appreciate that, Brad. We'll come back to you for a little bit more. I did want to come and get our last person up here, Danny, into this. How was your week in the market? We'd love to kind of hear where your thoughts are and everything like that, maybe setups or whatever.
Sure. I've been appreciate you having me on. Happy Friday to everybody. Yeah, listen, I'm not gonna change the tune that I've been speaking for the last few weeks. I'm mostly cash. I'm only day trading. Caught some really nice puts to the downside yesterday into today. I'm holding some puts into Monday next week. I don't think the bottom is in yet. I do think we will have a dead cat bounce. I do think we will continue lower. My best spidey senses are telling me possibly bottom near March, maybe 6 weeks, maybe after the first rate hike, potentially. Maybe that's a potential capitulation time. But, in the meantime, there's potential for a little more downside. We definitely I've been posting targets for the Qs and SPY all week, pretty plain to see on Twitter. Hit all my targets pretty much today. I was actually a little surprised about the velocity of the move into the close, but, was well prepared for it. And I closed out a decent amount of I closed out all of my puts for today and a decent amount of my puts for Monday on the indexes. Yeah, listen, I think you have to let's put things into perspective. So yes, this is definitely the worst week for considering from COVID lows, but in late September, actually early September to I think it was like early to mid October, we had about a 6% drawdown over 4 weeks on the SPY. Excuse me, I'm outside here. I got a dog. And this one we were down 8% in a matter of 2 weeks. So apologies. Let me go inside. Bear with me 1 second.
I mean, is this not perfect that Pup has a dog barking in the background?
Yeah, he's a nasty little dog. He's I'm visiting in Florida, visiting my mom, and this nasty little dog next door. He doesn't like anybody. But yeah, I mean, going back to what I was saying, this drawdown is a little more violent, but if you take into context the entire move that we've had from the COVID lows up to where we are now, we've had pullbacks. And this is certainly one of the more violent pullbacks that we've had. And it's a correction that was due. I think everybody knew it was going to happen, but nobody wants to admit that, this is possibly the big pullback. And if it is, it is. And if it isn't, it isn't. Reality is that's what we're seeing right now. And so when you have big, violent pullbacks like this, you're generally going to get what we call a dead cat bounce. You basically can have a counter trend rally back to the upside. And it's a lot of the times it's a sucker's rally, right? It lures people in. It might happen over a few days, maybe even a week and a half. Everybody gets excited. The market's going back up. And then you have some kind of quote unquote a news event or news that comes out and it just sends us right back down. And so we want to make sure that at least for the people that are listening that have never been through a market like this, these are the types of violent actions that you might potentially see over the next, coming days and weeks. And so you got to be prepared for this. Now, the thing that I would advise, if you're not familiar with this type of market, if you're not comfortable trading this type of market, cash is a position. It's okay to sit in cash. I've been sitting mostly cash in my day trading and swing trading accounts for weeks now. because the writing was on the wall. I posted, massive divergences on the daily and the weekly charts for SPY and the Qs. It was only a matter of time. And so, for me, been there, done that, seen it, right? And so I was just prepared for it. Now, maybe I left some money on the table by scaling out a little too early, but I'm okay with that. I'm more of a meat of the trade type of trader than the full burger. I'm not interested in timing tops. I'm certainly not interested in timing bottoms. Let the market do what it does. And I'm interested in extracting as much value as I can every single day, every single week. And so now I'm not buying anything long term right here, because I'm pretty confident that, I think after that first rate hike, that's when I think the opportunity to buy for the longer term is going to be. I don't mind the dollar cost average, but that's not really the way I like to play. What I like to do is see, good bullish structure form off of a bottom and then start to nibble there with tight stop losses. And if we miss the bottom there, then that's fine. Then we can let the market continue to fall and we try it again. Manage your risk, manage your trades, manage your losses, because in long term, like Stock Talk was talking about, yes, the indexes go up. The one thing I don't think, and I jumped in a little late, maybe I didn't hear him mention, but even within the indexes, there's rotation. There's companies that come in, there's companies that go out. So it's a little hairy to say, that the indexes always go up. They do over the long term, but the content within those indexes does change over the long term as well. And so, especially for like days like today and yesterday, I choose not to pick individual stocks to short. I short the indexes. It's the path of least resistance. I'm not trying to pick winners and losers. I'm going with, the easier play, so to speak. And that's what I'll continue to do. Now, if there are certain names like Amazon got absolutely crushed today, Shopify got absolutely hammered today, those were really good names to short if you knew the key levels on the breakdown. But I don't think anybody expected those names to get crushed like they did. So, but yeah, I think, again, name of the game right now, capital preservation, mental preservation, watch and observe the markets, wait to see a potential bottoming formation, but don't get caught in that sucker's rally that we're going to have. It could even go right back up to the highs, double top, and come right back down. So I'm waiting more to start deploying cash into the market, possibly in March. I think March, maybe a little later than March. I think after that first rate hike, then we'll start to see how the market's going to react to that. And of course, there's still all these geopolitical issues that are popping up now. There's still COVID. There's so much noise out there. So you just got to be really, really careful. Don't mind taking quick trades here, but I'm not necessarily looking to deploy long-term capital at the moment.
Thank you for that. All right, this was an amazing spaces. We are 40 minutes in on just off the initial go around. So I love that everyone up here has a bunch to say. And I think that's just naturally what's going to happen with this week. Like I said, FinTwit, everyone tends to get too far one way, whether it's too much bullish or too much bearish. This was the week where it's been rough. So I like to kind of come on these calls and bring us a little bit back into the middle. So we kind of talked a little bit about the indexes, and I kind of wanted to maybe start that with a point here. So you actually both did guys make the same point that, stocks don't only go up, but, when you look at these broad-based indexes, they tend to only go up over time because the bad stuff gets taken out, for lack of a better word, and good new stuff gets put in. Good and bad is obviously relative. It's that point in the moment. But today we are having a rebalancing. Maybe not a rebalancing isn't the correct word. Peloton is leaving the NASDAQ 100 QQQ to be replaced by Old Dominion, ticker ODFL. I just wanted to kind of know if you guys had any strategies or anything you have noticed over the last little bit, whether it's stocks getting included in major indexes or stocks getting removed from major indexes. If there's anything you've noticed with that, or anything you guys want to dig in a little bit more with that concept of how the stocks and the index change a little bit, but the indexes can keep going up. Really, if any of you guys want to jump in on that, or I could.
One more time.
I could jump. I could jump in if you want. Let me just take my head.
I think he's taking his headset off, I guess. Evan, could you repeat the question once more?
Yeah, perfectly. So I kind of want to use indexes tend to rebalance a good amount. Today we have Peloton leaving the NASDAQ 100, the QQQ, to be replaced by Old Dominion, ticker ODFL. I just want to know if Danny, Stock Talk, Brad, any of them up here kind of have any thoughts on playing that strategy, or kind of reaction to those stocks, how they kind of move around it, or maybe just kind of any in general with indexes rebalancing.
Yeah,
Did you say
sorry.
Peloton got delisted? Sorry.
Yeah.
Or did I hear
Peloton
that?
got removed from the QQQ, yeah.
Wow.
Yeah.
Okay.
Not delisted, though.
Yeah.
Yeah, I'll let Puff talk. He'll know more about that.
No, sorry. So what I was just going to say, or I don't know, for some reason my mic cut off, but yeah, I think that's a little bit of a signal, right? And we saw, kind of those newer age type of companies getting put into these indexes over the last 2 years, when growth is really strong, and this could potentially be a signal of a move back to value. Like Old Dominion's an old company; it's literally Old Dominion, right? It's been around for decades, and so Peloton being a new company, it had its shining moment, and for whatever reason, got put into the queues. And I think that was in hindsight, obviously, hindsight being 2020, it's a bad decision, right? It was a COVID driven company, and now it's no longer the darling. And look at how hammered that stock is. I mean, what did it hit, like 150, 160 last year, and now it's in the 20s. I mean, it had a little bit of a bounce today, but absolutely hammered. But I think that's a signal of a rotation potentially back to value, back to stability. I think it's a troubling sign for anybody who is a growth, high beta type stock trader. I think and I've been saying this for a little while now, 2022 is not going to be a fun year for a lot of traders. I think you have to take away your bias. I think you have to forget about what you were trading the last 2 years and start to really dig into the technicals on these charts. For me, you've seen names like Kroger, like Walmart, Antero Resources. I mean, I would never trade these names in the last 2 years, but in the last 2 months, that's what I've been trading. Oil and gas. I never touch oil and gas. That's all I've been looking at lately. So if you continue with your bias and you continue with the thesis that growth is going to continue to reign supreme, eventually that day is going to end. And I'm not saying that day is over. What I am saying is this rotation is going to be a little longer. It's going to be a little bigger than what we've seen, these little minor rotations into energy and finance over the last year. Tech takes a break, finance and energy tick up for a few days, and then it rotates right back into tech. We're not seeing that now. We're seeing a bigger shift, more of a shift to value. People are scared, funds are getting crushed. Retirement accounts are getting crushed. And, now is the time to really start rethinking your strategy. This is why technical analysis is super, super important, and fundamental analysis from that degree too. But the technicals don't lie. The charts don't lie. That's why I really, really rely on it. And, to be honest with you, one strategy that I've really used over the last few months is now when I go through charts, I no longer look at the ticker name. I just look at the actual chart itself. And only when I see a setup that looks good, then I'll look at the name. And honestly, I've just been quite surprised the last couple of months. Like, I don't trade this, I don't trade this, I don't trade this, but setups look pretty good. So if the setup looks good, I'll take it every day, all day, every day. But yeah, I think this is a little bit of a signal of maybe a rotation back to more safer plays.
Awesome. I appreciate that. I want to kind of keep us on a point that you mentioned. Actually, never mind. Sorry, we do have Juicy up here. Do remember, I want to kind of talk a little bit about being nimble and kind of changing with the market, and not really just having your preconceived ideas, really trading and investing off of what the market's giving you, as opposed to having a rigid plan, and as stuff changes, not sticking to it. But I did want to make sure that we got Juicy up here, and bring him into the conversation. So I would love to hear how your week was in the market. I know it was a rough week, and you're a big mentality guy, and you're sticking to the plan and everything along the lines of that. So I would love to know any of your more macro thoughts, or any thoughts you want to say to any investors or traders after this week as well.
Hey man, again, thanks for having me on. For me though, I'm a day trader primarily, so volatility is my best friend. Sorry, Bucky's over here trying to chase a squirrel, but volatility is my best friend. So today was actually one of my best days ever. I had AMC short, Tesla short from overnight. I had what I call X strangle, which is a strategy for earnings on Netflix, where I buy calls, inputs out of the money based off interest and other things. That hit for like 1,000%. But just looking at this overall market, my bear hat is in full emotion. And for the longer term, like when I swing something, I like to get monthlies on quarterlies, right? And I like to sit inside those based off the chart.
Quarterlies are the way with those swings. I agree with that.
Yep, based off what the higher time frames are doing. I like to see the weekly and the monthly line up when I swing. And right now with the SPY breaking the 200, oh man, I don't want to try to swing because I only prefer to swing to the upside. Now I will say this: I'm a big investor, and my biggest position I have is SPY. Now, am I going to sell my shares? Nah, I'm looking to buy more. I don't think the time is yet. Like Danny's saying, we got some rate hikes. I'm looking around March to deploy a lot of capital into this. If you guys remember 2018, December 2018, last time we had like some rate issues, man, it got really volatile. I mean, it was like down 1,000, up 600, down 400. And I think that's the environment we're about to get into while we mess around with this 200. Now, I can't give an exact number, but my exact bottom is going to be that low of those October lows. I think they were like 424. If we come down to that area, that's the area where I would definitely be looking for any type of hammer, any type of, the chart has to give me some type of reversal play. That's why I'm going to be looking to buy those quarterly options on SPY and a couple other things and buying more shares. But for right now, I think the best way to approach this market is just to be a short-term trader. And then the cool thing is about this market is that you can still make money on the downside, but you got to be quick, right? To the upside, when you're trading the long side, you kind of want to be more patient with those longs. But on the short side, it's very, very fast, right? So for me, I'm playing it day by day. I'm coming in with a plan, watching 3 or 4 stocks. And if they hit, they hit. And just know I'm not really trading the second half of the day, even though it looks like over the last couple of days, it was the second half of the day where we sold off, right? But I'm still following my plan, executing my process, and leaving, walk away. But I definitely think we get volatility here. My reversal area is 451 on SPY. We get back above 451. That's why I'm like, okay, we'll put some more to the long side. But for right now, my bear hat's on, swing trading hats in the trash, and I'm just going to be a full-on day trader.
Awesome, Juicy. Appreciate you as always. Definitely want to roll around and bring you in the conversation and keep you in here as we do cycle around. I did realize we've been going for 50 minutes here, and I didn't say once. I don't think that you should be following all the speakers up here. Maybe once, but I think it should go without saying we have we select speakers to come up here. This is only the best. Make sure you're checking out every single one of them. Give them a follow. Stock Talk, Wolf, Brad, Danny, Puppy, the Pup of Wall Street, Juicy, Bullish Rippers, Joey up here. Make sure you're checking out every single one of them. They come in here and have such amazing insights. Are here to share some really great knowledge with all of you on this red week for the market. And they're kind of just coming up here off the cuff and just spitting out how they're feeling. When they have that time to sit down, write down their thoughts, think about it, there's going to be some really amazing content coming out of that. So click into all their profiles, check them out, give them a follow. The real truth of it is, I've been saying this a bunch recently. You can hit that unfollow button for free. There's nothing into it. You will not want to. Don't get me wrong. You're not going to want to unfollow these people, but it's there. It's super easy. And with that, what is a Twitter Spaces without a Google Calendar shout out? It is by far the absolute best tool that we have created. And I know all of you guys got to be on it, guys and girls. But yeah, Wolf, can we get that shout out?
Ask and you shall receive. Mark it up, mark it down. Doesn't matter. You're getting a calendar shout out. And basically, for anybody that is listening, we know y'all are busy, and we have 600 plus people in here. And I'm sure many of you are brand new to our type of spaces, but we do spaces every single day of the week. We did 18 spaces this week. I mean, those are every single day. We're putting in hours and hours and hours. But how can you find these spaces if you're not sitting on Twitter for ungodly amount of hours like we are? We've made that process super simple. Myself and the other hosts up here, Stock Talk Weekly and Stock Market News, have collaborated on a free public Google Calendar. This way, at the beginning of the week, I can go in and I can load up every single space that we're going to be doing onto this public calendar and add the time, the speakers, the topic, everything that you need to know at one glance, and anybody can be added to this. The simplest way to get added to this, and do this right now if you're not already on it, because we have over 3,000 people on this, including several hundred this week, is just DM either myself or Stock Market News, the host. If you click into our profiles right now, click on our profiles, you'll see our DMs are open. Anybody can DM us, even if we're not following you. Go ahead, shoot us over your email, preferably at Gmail. That's all that we need. With that Gmail, we can add you right onto this. It doesn't get shared with anybody else. You can join thousands of other investors, hedge fund managers, CEOs,
We have all different types of people in this calendar. Even people who work at Twitter know that this is working. We even talked about it with one of them live on Spaces yesterday. They've DM'd us and asked to be on this calendar. It's not just stocks. We cover every major investing topic, from stocks to crypto to NFTs. We cover technical and fundamentals, short and long term. But if you chanced upon a space and you enjoyed it, this is your way to plan out your week ahead of time, be able to make all your favorite spaces. And our new feature, which people have been loving, is if you miss a space, you'll see now all spaces are recorded. And we actually will take the recording link and put it right into the notes section on the calendar. So you never have to go scrolling through our timelines, trying to find it or DMing people. Everything at the tip of your fingers when it comes to spaces. It is the single best, in fact, pretty much the only tool for finding the best financial and investment spaces on Twitter. So with that, I will say once more, please come into our DMs. They're wide open. Shoot us over that Gmail. We'll get you on it ASAP. And of course, as long as you're following Stock Market News, myself, Stock Talk Weekly, you'll see it show up at the top of your timeline when we go live.
Perfect, Gav. I appreciate that. Definitely one of the best tools that we've created. Make sure you're on it. But we'll chill out there. Get right back into the content of this week. Stock Talk. I think it's been a little bit since we heard from you. Is there anything that you think we should talk about here before I kind of get us on the next topic? Anything top of mind you wanted to push us down that direction?
No, I mean, I really I love when, Danny and Brad are two of my favorite guys to listen to, and having them up here, I enjoy their input. So appreciate you guys for that. But yeah, I mean, no, I really like where the conversation is going. And, this is the type of, environment that I think Twitter Spaces and FinTwit is really meant for, is climates like this where, people are suffering massive losses. And, I'm still getting DMs now after the close from people, my Discord and on my Twitter, who are really in bad shape. And maybe it's just the empath in me that it makes me feel kind of like, not sick to my stomach, but it kind of gives me a gut punch to see people, some people who are losing their livelihoods over this stuff. And I think a lot of it was, I'm not one of those people that rides the train of saying that digital brokerages have gamified trading, but I'm not ignorant enough to also say that they haven't done that at all, because in a way they have. And you go back to 2020 where all year long FinTwit was raging in 2020 because everything was working, right? And when you have a massive spillover liquidity, that tends to be the case. In situations like this where we have so much chop and people are getting slaughtered on premiums, or they're just holding these positions they've been holding for the last 2 years and they're getting slaughtered, I think that a sense of community really helps. It's something that for me, when I started trading, there wasn't as much of this social media presence. Not at all, really. I mean, there were like message boards and I remember Yahoo message boards and Reddit with, still had niches where people were participating, but there wasn't this kind of like central, community. Like when I'm on Twitter, I don't even look at anything besides FinTwit posts. And so I think there's a lot of people that do that. So, I just think that, while I know a lot of people are grateful for this sense of community, I really encourage all of you who are having a hard time to take advantage of it. I know Danny freely answers questions. I know Brad freely answers questions. Juicy as well helps a lot of individual traders. And I try to do the same as well. None of us are up here are going to judge you for being new or judge you for not knowing what you're doing. We do these Twitter spaces for free, and we all tweet for free because, while some of us have paid services, some of us don't. We're here. We've been here for, I never even had a paid service until over a year of all free content on this page. And so make no mistake, we all have lives. We're here and we're spending time here so that you guys can benefit from it, hopefully, and learn something and be able to better navigate the markets. Because, granted, I've had some banger plays this week. Danny has had some great plays this week. We've all had great plays this week, but I don't think anyone is going to come up to you in this kind of market and say it's easy to trade in this market. It's not, right? It's not like the 2020 and 2021 markets. It's not, there isn't follow through. You can't swing trade as well. Holding overnight gets more and more dangerous with these flick ups and flick downs and this chop. So just adapt your strategy, is really the bottom line. And don't be afraid to do that. Don't be afraid to, if you are suffering massive losses in a climate like this, the reality is if you're massively underperforming the indexes on days when they're down and on days when they're up, you're also underperforming. That is a telltale sign that you're misallocated, and that you need to rotate your portfolio to some degree. So, none of us up here are perfect either. As long as we've as experienced and as disciplined as many of us are, we all still make mistakes, whether it's due to psychology or ignorance or ego or whatever it may be. We're all humans still. No matter how much experience and discipline you get, and how much you tell yourself to follow your rules, every great trader I know still breaks a rule every once in a while or makes a mistake every once in a while. And so don't think that you're alone. I've booked huge losses this year on options, on RDW and Planet. Like, I got slaughtered. And I know a lot of people who followed me into those trades got slaughtered too, but there have been great trades this year, like FATH and TFT and Fun. And there have been some great, gainers, and there have been some losers too. But that's part of the market. As long as you are controlling your risk. Juicy said something earlier today, actually, that I was going to piggyback on, but I forgot to comment when Juicy was talking. But Juicy said something earlier today where he goes, I really liked it. He said, I have three outcomes to a trade. I either win a lot of money, I win a little bit of money, or I lose a little bit of money. There is no I lose a lot of money option, because the stock market is one of, I've tweeted this before as well. The stock market is the only betting climate on earth. Not blackjack, not sports betting, not roulette, not poker. Blackjack is the only, stocks are the only betting climate on earth where you can make bets on companies and you can also control your risk at the same time. You decide how much you want to lose, whether you're using a physical stop loss, whether you're using a mental stop, whether you're using a percentage of your portfolio as a hard stop, whatever you're doing, you have to have some kind of protocol to manage risk. Some kind of protocol. And it can be more, the higher your risk tolerance, it can be a more liberal protocol. Maybe you have a 20% stop loss. And the lower your risk tolerance, maybe you have a tighter percent stop loss. There are day trades I take when I'm using equity positions, not on my options positions, but on my equity positions, there are day trades I take with a lot of size where I'll have a 7% stop loss. And I'm like, look, if it fails and I got a bad entry, I'm out. I don't even care. And so, managing risk is going to aid you so much because you won't have drawdowns on days like today. You might have a drawdown, but you'll have a controlled drawdown. You're not going to see people who, like I told you, that screenshot I got from the guy whose portfolio is down 40% in one day. That is shocking, right? That's a shocking lack of risk management. That is kind of an inability to accept that you're wrong. And that's another topic that all of us have talked about too, is a huge important part of being a successful trader is accept when you're wrong. Because if you don't accept when you're wrong early enough and take the loss and move on, then that loss gets bigger and bigger and bigger. And the bigger the bag gets, the harder it is to cut. The phrase I always use from Pete Doom, who was, one of my mentors in the later part of my trading career, he always told me, take knife wounds over axe wounds because you're much more likely to survive them. You take those 40, 50% losses, 60% losses on a massive position, you might be able to take those one or two or three times. But if you're consistently taking losses of that size, your portfolio will shrink. And eventually you can blow it up as well, especially if you're an option. So manage risk and keep adapting.
Thank you, Stock Talk. Spitting facts there. I want to keep this conversation going as natural as possible. Are there any kind of people that I want to pick off there on how you're feeling about the market and investors and how they should be reacting?
I think, just from a technical perspective, if we wanted to discuss, because we do have multiple people up here who are pretty strong with the technicals, I would love to hear from them levels of support now that both SPY and QQQ have closed below their 200-day SMAs. I would love to hear from them, where they see the next levels of support and how they would play those triggers to the upside and downside.
Pick who you're throwing it to. Keep going. I love the host.
Okay. Well, Danny, sounds like you would want to go first.
Sure thing. Let's take a look at the Qs. I actually put out a target zone for this week, and we actually hit it. We nailed it. Actually, it went even further down than my target zone for this week. So My next target zone on the Qs had a little bit of a speed bump at 347, but ultimately I'm going to be targeting the next demand zone below that, and that's going to start right below that that trigger at 340. I think between 337 and 340 is going to be the area that I'm going to watch to see for a bounce. And actually, if it hits there, this looks like very much like an expanding diagonal from an Elliott wave perspective. So I would watch for a bounce between 337 and 340 with a potential speed bump at uh, a bounce between 337 and 340 with a potential speed bump at around 347.50. So that's for the Qs. And then for SPY, again, kind of nailed the bottom here, but it actually just went a little below it. I had a 1/6 minute extension to 441. I was holding 440 puts for today, and I would also have 438 puts for Monday. Close out the majority of those today. I didn't think it was going to get there, but it did. I had a 786 retracement at 436.86. We did not hit that quite yet. I think we're just about there. We closed at 437.48. So if we lose that level, that's definitely in the zone of scary time. I think we come down to potentially 343, excuse me, 434. That would be the next level of support that I would be watching. Below that, I don't even want to say what the next level below that is. It would be in the 420 region, maybe 420, 422. The one thing I will say, if I'm looking at this from an Elliott wave perspective, this is why I was able to nail the bottoms on the Qs and the SPY. It was basically just using Elliott wave. We had an ABC correction right down to where we are now. That's my C wave. And generally what we see is a counter trend rally with another ABC back to the upside. That's what I'm anticipating to happen next week. Maybe we get a bounce Monday, Tuesday into the Fed meeting. Don't know how that's going to play out, but that's what I'm going to be watching for. I do think we have potentially a temporary bottom in, just based on the sheer velocity of the move over the last few days. Certainly, this could continue to move down, but short of any particular news, I do think we get a little bit of a relief bounce, what we call a dead cat bounce. And that's what I would be watching for early next week. But I'm going to be basically neutral going into the Fed meeting, the FOMC on Wednesday. And I think, based on the way the market's been reacting, my best guess is that the Fed comes out and says something to the effect that pushes the markets back higher. And I do believe that is what will get that ABC correction counter trend rally back to the upside. But I ultimately still believe that there is another big leg down for this market. So I know it's not what everybody wants to hear, but as a technician, that's what I'm seeing in the cards. And like Juicy said, and like I said prior, I'm really looking at possibly March after that first rate hike or the potential first rate hike. That's what I'm going to be watching for to start deploying real capital back into this market.
Thanks, Danny. Juicy?
Hey, man. Again, thanks for having me. Before I leave, I got about to hit the gym right now. You might hear Bucky barking in the background. So we broke the 200 on ticker SPY. My next level I have target down is October 13th low of day. That's going to be 431.75 and 426, which will be the September 29th low, the 426 area. Those are my two next areas to watch. Current price is 438. Now, me personally, we're straight down. All right. So you guys remember, if you look at the chart October 13th through November 4th, real straight up. And once we hit that high, I was like, dude, we got to consolidate. So the same thing is going on right here. We sold off very quickly. I'm looking for consolidation. All right. And I got to agree with Danny. Going into that Fed meeting next week, it's going to be all depending on what he says, right? I don't know what he's going to say. I'm not a big fundamental guy, but I'm definitely going to be playing this nimble until he speaks. Maybe he says something dovish because everybody's so hawkish and bearish right now. So any little dove, maybe that'll push us back up, but we just don't know. Let price action tells you. So if price comes into the 431.75, you get a reversal. Any type of hammer inside bar, that break above both of those bars. You want to let price action tell you it's going to turn around. You do not want to try to guess the bottom. In my inbox, I've had people say the last 3 days, I'm buying the bottom, and I'm looking back and it kept dipping, right? So you want it to bounce. You want price action. You want the chart to tell you it's going to turn around. These are the levels. Let's see how price reacts, because at the end of the day, they could crack through them and keep it moving. And that's a different perspective, but we won't know until it happens. Again, trading's all about reacting, not trying to anticipate. But that's all I got. Again, be sure to check out Wolf, check out every speaker here, check out the calendar. I'm heading out, guys, and let's have a good week next week. Be easy to everybody.
Perfect. Thank you, sir. Yeah, so I think that was a really interesting point that y'all heard from Juicy there. Although there are drops here, and he's a pretty well-educated investor, he's looking at SPY as one of his largest positions. And if you're in the audience and you've been kind of getting massacred on some of these different, growth stocks in different areas, the indices are still up 12% year to date, maybe a little bit more than that, actually. When you look at, I think, the S&P, I'd have to look at the
Dude,
Qs.
it's a new year. We got to update the year to dates.
Oh, well, not year to date, my bad. Year over year, I guess if you want to put it that way. Year to date, we're down like 7-8%. But with that being said, there's still, a lot that can happen here. We saw over the last 2, really to 3 months, starting around November 7th, 8th, 9th, right around there, growth stocks started taking a hit. And since then, many of the stocks within the NASDAQ, the Qs, have taken 50, 60, 70% haircuts. However, the indices for a long time held, and they continued to make new all-time highs, and we continue to see them rise because they are weighted by the largest stocks in them. So Apple, Tesla, Facebook, Amazon, etc. have very large position weighting. And if you go to finviz.com, finviz.com, you'll be able to see this. They put it on a heat map for you, where it's very easy to understand why so many stocks can take a beating, but the overall indices stay large. If you tuned in on Tuesday night, I did a space with Puru Saxena. It was an amazing space. We had 10,000 people tune in. 50,000 people have actually listened to the recording since. And what he talked about is a look at growth stocks now and staying away from the indices. Rather, he's actually shorting the NASDAQ at this point, because what he expects is now that some of those smaller stocks have fallen so far, it's time for some of the big dogs to come down. So he's looking at those larger stocks and he's staying away from them at this point. And, it was a little bit prophetic if you go back to it. Since that space with him, we've seen almost a 4 or 5% drop in the indices. However, some of those growth stocks are still getting hit. So we're kind of getting hit from multiple angles. But essentially, I think the look here is some of these growth stocks could have a quicker recovery than the indices do. But that's why I wanted to have some technicians come in and give some key levels on the indices to lay out. So right now, we closed on SPY, which is the S&P 500, at 438.02. I guess maybe there's some after hours, I think. And then on the Qs, slightly higher than that. It's a little bit different. But those are, again, heavily weighted by those large caps. So we preach this all the time. It's all about finding what works best for you. Are you a large cap investor, a small cap? Are you going to be just targeting indices? Are you going to be targeting growth, value? There's a lot of whatever area you decide to target, though, you need to understand it very well. And a great way that you can do that is, one, YouTube, Investopedia, even Reddit. Like, there are forums on this stuff. Read up on what you're investing in. Know the stocks that you're holding in your portfolio, preferably like the back of your hand. And if you can't do that on 20 different positions, have 5 positions, have 10 positions, right? Don't feel scared and FOMO into a number of positions, because anything can happen on a given day. The market's wild. We saw Peloton, the other day, news came out about the CEO, stock drops 25%, right? That's a little bit hard to see coming, but in many other cases, if you have a good grasp on the stock, like Brad does whenever we hear him speak about the stocks in his portfolio, you're going to come away with a strong understanding and be better positioned for risk management. And then if you implement the other tips, like Stock Talk Weekly was very passionate about here, about managing that risk with stop losses, about playing the downside and hedging your positions, that's when you can work in a full and comprehensive plan for attacking the market. For people that do this full time, this is a job like any other. And just like any job, you get better at it over time, you get a better understanding, you have more approaches, and you can do more with it. But for many people who are, earlier on to it, the first few years in, you really got to take this time to study and learn. Otherwise, like they said, Juicy loves saying this, and I'll kind of turn it back to Evan on this. The market is a zero-sum game, right? There is somebody on the other side of that trade. So you have to approach it from a smart perspective because somebody is trying to take your money. There is a market maker out there, or there is a Danny out there, or a Juicy that wants you to place the wrong trade so that they can, well, not Danny. Danny wants you to place the right trades, but there are people out there that want you to place the wrong trade so that they can take your money because they're on the other side of that. They're waiting for you to mess up, right? It's not like your money's just disappearing into nowhere. These market makers want you to have the wrong inclination. So be careful when you're placing these trades. Take your time. Don't just FOMO in. Use risk management. Because again, there is a other side to it. So with that, I'll turn it back to you, Evan, for any topics you want us to cover.
No, I thought that was perfect. Damn. I'm trying to kind of change the way I speak on these spaces, be a little bit more
Now you
affirmative
see it, right?
as opposed to saying, no, yeah, no, I did come in there. So we'll work on that. We'll get better at this over time. But I definitely do agree with that. Love the sentiment, Gav. We appreciate that and love having you on here. We're going to throw us into the wrap-ups a little bit here, go around, give some people to give their thoughts on the market, everything like that. I did just want to throw this out there. We are on FinTwit. We are in a spaces. This is generally going to be the crowd of people that wants to put in that extra work to outperform the market and pick individual stocks, whether that's trading or investing. But the truth of the matter is, when we look at the perspective of everybody who's investing in the market, what is the best move for the average person to do? The answer is dollar cost average into broad-based indexes over time and don't really look. You can come in here and try and grind and try and pick individual stocks to outperform that. But, for that average investor, you can spend – you have to really think about your financial health and financial plan as a whole, but you could spend 5 minutes a week really thinking about the stock market specifically, and really, really be a successful investor in this game. So, if you're ever struggling, as Stock Talk earlier said, don't quit if there's financial reasons for it. That's definitely different. You got to do what you got to do. But if you're just quitting because it's not going well, there's a lot of different strategies, a lot of different areas, a lot of different methods you could do to still be active in the market, pick individual stocks, whether it's go back to square one, invest with a little bit of less money and kind of work and grind to get better. Or you can invest in these ETFs, these broad-based ETFs, dollar cost average, which means don't just buy, your entire position today, slowly buy it in over time, and you will end up being successful because, the stocks do not only go up. Every single stock in the S&P 500 in the indexes will not go up. But over time, you're going to see that the index as a whole is going to tend to only go up. You'll have a bad year in there, but when you're looking at 5, 10, 15, 20-year time horizons, it really will only go up. So just wanted to get that out there kind of, sometimes I've said this a couple times on this call, FinTwit, human emotions, we get too far in one direction. When the stock market goes down, it's chaos, it's panic, it's everything like that. When the stock market's going up, it's blissful joy, we can only go up forever. And the answer tends to be you have to not get knocked in the other direction. So I'm gonna come on here when we're raging in a raging bull market again, which hopefully comes in the near future, but will be in the future. And I'll be on here saying, we probably should, taper a little bit, kind of lower expectations and whatever. But when the markets have been taking a hit, this is the worst week for the S&P 500 since March 2020. I think it is also important to kind of take the other side of it and know that, we might have another week, 2 weeks, month, whatever it is, and the market's going down. But when you look at the long-term perspective, when you look at the next year or so, I'm still confident. Next year, maybe next 5 years or so, I'm confident. I can confidently say, I believe in the S&P 500. I believe in the QQQ over that time period. So yeah, that's where I'm at with this. I'll quit blabbering there and let us get around into the wrap-ups. If you guys want to take your time here, we have a decent bit of time here. I know, Dan, you have to go, so I'll come to you first. But yeah, anything with wrap-ups, mentality, maybe your setups for next week. Yeah, anything you guys want to get out here. Actually, sorry, just Danny, before you do go, I did just want to say one more time, make sure you are following all the speakers up here. We've had to have Stock Talk drop off. Juicy did as well. But everyone that we have up here are top class speakers, top class Twitter accounts, and they will make your feeds better by following them. So check them all out. And now I won't head fake you, Danny. I'll actually throw it to you.
All good, all good. I do appreciate you guys having me up here as usual. Make sure everybody give a like. Excuse me, a like. I'm getting into my YouTube video creation mode here. Yeah, just make sure everybody just follow everybody up here. Just follow them. Just do it. Just don't listen to anybody up here. Just follow these people. We're all up here to put out our knowledge and hopefully, give you guys and gals nuggets of information that you can then turn and take and become better traders and investors in this market. But listen, I don't want to sound joyful. Obviously, the market is coming down, but there's always two sides to a coin. Yes, the market is coming down, but guess what? Some of your favorite names are going to be very, very cheap. And for me, I'm very excited about that. I'm very excited about getting cheap Tesla. I'm very excited about getting cheap Amazon. Maybe not so much cheap Peloton. I don't know about that, but there's definitely names out there that I feel like, they higher. And we need for them to pull back so we can get them at a good valuation so that in the next 5 years or 10 years, we can look back on this and say, all right, that was a nice, pullback area to get some shares of your favorite name. So you have to look at the market that way. There's always going to be opportunities. You just have to remain patient. That is probably the most important trait, not even just in trading, just in life. You have to have patience. You need to put the time and effort in, you need to put the work in, but you have to remain patient. Good things come to those who wait. Wait for this market to bottom. Don't try and think you know where the bottom is. Don't try and call a bottom because trust me, unless you're an expert technical analyst and you have inside knowledge, you do not know where the bottom is. This bottom might not be for months, and you might be deploying capital now, and your name is still going down. So you just need to be very careful right now. Let the market do what it does. Don't try and time it. Wait for this thing to start to consolidate. We might get a quick bounce back up. Don't get suckered into that sucker's rally. That's all I'm going to say. I don't have any names I'm looking at yet. I always do all of my homework on the weekend. So just make sure to check out my threads. I will have a lot of charts, weekly charts posted tomorrow and Sunday. And, it's not going to look pretty. But what my plan this weekend to do is to take my top 10, 15 favorite names, do some really good due diligence on them, find really good pullback zones, and you're going to see a really green box, and it's going to say buy zone. For me, that's where I'm going to look to start potentially adding, but not before we hit there. If we don't hit those levels, I'm not going to be buying. For me, I have to look at it that way. For you, you have to figure out what your plan is. Don't follow me. Don't follow Juicy. Don't follow anybody. You have to come up with your own plan. You could see what we do and say, oh, that looks good, but make sure you do your own due diligence. You can't, from a psychological standpoint, you can't say, oh, well, I like what Pup did, so I'm going to buy what he said. Because then what happens is if I'm wrong, you don't know what my plan is. You don't know when I get out. And therefore, if you don't get out when I get out, then you can say, oh, well, I followed Pup and he was wrong. So, no, because you could easily blame someone else for your mistake. You need to own these trades yourself. You need to own these buys and sells yourself. And you need to do your homework. So do your homework, eat your Wheaties, do your thing, have a really good restful weekend, and let's come back at this market next week. But remember, average down your position size, under trade, and be patient. Thanks, guys. Really appreciate you having me up here. I appreciate everybody on this panel, and I really appreciate everybody in the crowd that continually tunes into these spaces and allows us a platform to say what we need to say. So I really do respectfully appreciate all of your time. Have a great weekend, everybody.
Appreciate having you, Danny. We're lucky to get you in here each week. One of the favorite people we get to come on these spaces. Definitely have built a great relationship. So definitely everyone up here, Danny's going to be grinding, doing some research into this weekend. I will definitely be doing some research as well, but it was a red week. Maybe it's a good time to take a little bit of time off. And I was thinking about it. Everyone likes to talk about how crypto being open 24/7 is a great thing. Bitcoin fixes this, that stocks aren't open on the weekend. Well, we'll see how they're feeling about that this weekend. But I'll keep us going in the wrap ups and throw it over to Brad.
Yeah, I just maybe echoing some of the other things that people have said. Twitter's a fantastic, incredible resource for sourcing inspiration, but it's not really a place to go to finish your work. It's a place to go to start your work. And shameless plug for my newsletter that I'll send out a new post tomorrow that I pinned to the top of the conversation. I cover 23 companies intricately in detail, everything you need to know, and that's pretty much all I can do. So if you're stock picking, and especially if you have a full-time job, because this is basically my full-time job at this point. I'm in grad school, but I focus on this a lot more than grad school. So if you have a full-time job and kids and responsibilities, I think maybe trying to juggle 40 to 50 names is almost impossible to do well. So I guess yeah, just lean on all the resources that Twitter has out there available. That a lot of them are free to kind of augment your research, but don't use that as the final confirmation. And just yeah, I think what I'm going with is sort of Evan's pitch for if you really don't have time or the inclination or really the stomach to hold these high growth compounders that I hold and a lot of people love to talk about on Twitter. There is no shame in owning SPY or QQQ or some of the other broad-based ETFs that people talk about. I mean, I own SMH, which is a semiconductor ETF, because I really, to be frank, don't know enough about semiconductors to go stock picking in that industry. So just be super honest with yourself. If you have time to learn a company in and out, and if you have resources to do that, maybe it's one of the 23 companies that I cover and can help you out with, hopefully. But if you can, then by all means, then by all means stock pick, and if you can, and if you don't have the time again or the stomach or the inclination, indexes, like everyone else is saying around here, are not nothing to be ashamed of investing in at all. A lot of us will struggle to beat indexes for the next several years. And I mean, investing in the benchmark ensures that you perform with that benchmark. So yeah, a long way of saying, if you have time, I do truly believe that stock picking can be extremely rewarding, both experiential and financially. But there is a place for indexes for sure.
Definitely do agree, Brad. Our pleasure to have you on here. We've been doing so much more with you. We've been stepping up the spaces. We're at least at one or two a week at this point, and we're lucky to have you. We love getting you on here. We love these long-term investing insights and everything you got to say in general. Brad, one more shout out. You mentioned you got a newsletter coming out tomorrow, I believe what it was. I see you linked it up there. Is it in your bio or something, or just kind of in the nest above?
Yeah, thank you for giving me a chance to talk about it. I appreciate it. So, yeah, weekly news posts on those 23 companies that I mentioned that I religiously cover. So basically anything interesting from the week. There was a new Kroll bond rating agency issuance report on Upstart that I'm going to cover. I'll go into PayPal and kind of the investment thesis, SoFi banking charter, and all the perks there. So yeah, I really I appreciate the chance to talk about it. Everything's free, by the way. I don't charge for anything. And as long as I'm in grad school and studying there, I don't plan on charging for anything. So yeah, I do this work because I really enjoy it, and hopefully people find it valuable as well.
Definitely is, dude. And Wolf, just so you know, I was literally about to say, nah, it definitely is. And I stopped myself. I thought about it, mental stop, boom. Increasing hosting skills, love to see it. But with that, I will throw it over to you, Wolf, to keep us going in the wrap ups.
Sounds good. Everything that I had to say has pretty much been said, but I did want to thank the several hundred people, and I think we had thousands of people come through here over the past hour and a half that tuned in with us, enjoyed some time with us, which was awesome. We had some really cool listeners audience. I see memes and Jonah and Vegas and other friends, TSCR and Calvin. My guy Matt, big shout out this week to Matt for hosting me, taking care of me and all that good stuff, which was great. We also had the Twitter Spaces account. The official Twitter Spaces account was chilling in here for like 5 minutes while we were rolling. So I really like that. I am working on some stuff with them. I am going to co-host a space with the Twitter Spaces account in the near future. So be on the lookout for that. I've been chatting with a lot of people over there. But yeah, one more time, if you didn't hear it beforehand, we have a free Google Calendar that anybody can join. to make sure that you do not miss any of our spaces. I already have like 12, 13 spaces planned for next week. All you have to do, click on my profile, click on Stock Market News, click on our DMs. They're wide open. I already have like 15 DMs from this space. Shoot us over your Gmail. That's all that we need. Just ask me on the calendar if you want to say hi or anything. It's a great place to do it. Great, spot to do it at the same time. We get some really, really nice comments. It means a lot to us that y'all appreciate this. It really does. Joey can tell you, like, on Thursday, I had already done 4 hours of spaces straight. I'd done a space in the morning, and I had another 2 hours of spaces to do. But we grind and we enjoy it. And, it gets tiring, but y'all really make it worth it and support us a lot. And then, of course, as long as you're following the Stock Market News account, the Wolf account, you will see those spaces at the top of your timeline. God bless Twitter Spaces for putting me in the algo and putting my spaces at the top. Clearly, something's working with Stock Market News too, because he can pull thousands and thousands of people into a space. If you're not already following, Stock Market News is like a gem of an account because, one, you get these amazing spaces, but two, all of his tweets, just straight gold. It's like having a Bloomberg in your back pocket. Make sure
Can I interrupt you real quick, Wolf?
You can always interrupt me, Brad.
So, Twitter Spaces, hosting is not an easy thing to do, not an easy thing to get to have conversation flowing and information with no awkward pauses for 90 minutes. So both of these guys say really nice things about all of us, but we should really be saying a lot of nice things about them because they do a great job bringing so many communities together in Twitter and disseminating information through this wonderful channel. So you guys both rock too.
Appreciate you, brother. Yeah, that's most of it for me. I'm gonna probably not be on Spaces tomorrow because I'll be on a plane. So we'll see what happens with that. But next week, like I said, I'm already planning out all sorts of spaces. I'm gonna have spaces about investing in cannabis. I'm gonna have technical analysis, fundamental analysis. I'm planning a space about investing in IPOs. I'm actually talking with a company right now that's going public via SPAC in like a couple of weeks, and I think I'm gonna get them to come on a space with us. I got their pitch deck and everything, and just grill them live on a space for like 20 minutes. During that, just to like see like, okay, you're about to go public, what do we need to know, and things along those lines, which is crazy that we can do that legally, but it seems like we can. We're also bringing on the chief commerce officer of a Bitcoin mining company for a live space, and just so much more. So I'm excited for it all you, Evan. Oh, and big shout out to Bullish Rippers. If you're not already following the Green Raccoon account that's up here on the top right, we did do a space from that account earlier today. It's kind of like a combo of accounts. So I host spaces from there, Evan hosts spaces from there, and he tweets from there. So you're going to get my spaces as well as Evan's tweets from one account. That's Bullish Rippers, the Green Raccoon up top. Evan, throw it over to you. And I think Joey wanted to give a quick comment in closing if you got time.
Definitely not. I appreciate that. I want to reiterate, check out Bullish Rippers, doing a lot of really, really cool stuff there. Quickly, I am going to throw it over to Joey in a second, and then I'm going to throw it over to Asset Dash. I will kind of intro them in a minute. But yeah, I want to keep us moving. We are in the wrap-ups fully here, but Joey, what do you want to add? Love to hear it. First of all, actually, can I just give a big shout out to Joey? He's been helping out on the Wolf account. He was having a couple technical problems, Wolf, over the last couple of weeks, and Joey was definitely someone who came in clutch, and since then I know has been helping Wolf a lot on the back end, and I'm a big fan of Wolf, so make sure you're checking him out as well. But yeah, Joey.
I appreciate the kind words, man, so thanks for that. But yeah, just wanted to say it's a pleasure to be up here with these top tier speakers. So everyone be sure to check out Brad, Juicy, Danny. They're the best in the business, so definitely worth a follow. And if you're in the audience here today and you like what you're hearing, be sure to check out Wolf Financial, Stock Market News, and Bullish Rippers. They're putting on the best spaces in all of Finchwood, so be sure to slide into their DMs, send over your Gmail, and get on that Google Calendar so you can be a part of the best spaces. And with that, just one more real quick thing. It can be a scary time right now for a lot of new investors and traders out there, but it's, it can be scary, but do your best to stay patient, take a deep breath, zoom out, and understand that things will get better. So keep your heads up, kings and queens, everyone out here in the audience, and hope you guys have a great weekend.
Awesome, Joey. I appreciate that. Thank you for that. Brad, Wolf, Joey, thank you guys all for joining in, everyone who had to drop off as well. But I'm going to throw us one more thing for this FinTwit Friday. Myself and actually we have Ramp Capital up here as well. He's definitely the big boy in this relationship working with Asset Dash. There's a bunch of other people, but we have both been lucky enough to work with this company and this app who is doing some really cool things. I'll let Matthias, the guy behind the account Asset Dash, come in and really explain it to you. But I did just want to definitely intro this to you guys, that this isn't just some random company, paying me to do an ad or whatever. This is a team that I do own a tiny, tiny, tiny piece of the company, and I've been able to work with them and be a part of it and really kind of get in there on the back end and really make sure this app is what it should be and what it will be for all of you. So I definitely want to give Matthias the chance to come up here and really explain it and why we're all super excited for it.
Yeah, no, thanks a bunch, Evan. I appreciate those kind words. Quick pitch on AcidDash and what we do. We make it easy for you to track all of your investments in one place. So the average investor today is now investing in multiple asset classes. You have NFTs, you have cryptos, you have stocks, and it's very difficult to see all of those things in one dashboard. We solve that for you. So you can connect your Robinhood, you can connect your Coinbase, you can paste your Ethereum address, you can paste your Solana address, and you see all of your investments being tracked in real time. We break out the NFTs into their own investment class. So you actually see your individual NFTs as holdings in your portfolio. So you can see, what is my NFT worth compared to my, Apple allocation, so on and so forth. We send push notifications daily about your holdings, what's performing great, what's not doing great, so on and so forth. And yeah, so far user feedback has been fantastic. Big thanks to Stock Market News and Ramp for all the help that they've had in getting the word around. So this weekend, if all of you have time, definitely give it a download. I know it's pinned here at the top, and let us know what you think. We're very responsive on DMs, so if you have feedback or want to see anything in the app, please shoot us over a message, and more than happy to chat.
Awesome. Love it, dude. One thing I do want to just throw out there, I have spent a bunch of time trying to figure out the question, what is my net worth? I'm someone, I'm definitely mainly a stock guy. I have a decent crypto portfolio in there and a little bit of NFTs on the side, but I have 5 to 10 accounts. I just know that I have spent so much time with a calculator scrolling through like 10, 15 different accounts to figure out where I'm at when, now I have the ability to do it in one place. Maybe today was not the day we wanted to look into it. Could have been better, but I love the message that you got out going there towards the end of the day, talking about taking a breath, and sometimes it's best to step away. Yeah, I would love to maybe kind of ask you another question about the app. Maybe we bring you on next week once some of the people from the crowd have had the chance to kind of go in and use it. But yeah, I would love to know, is there anything else, we're trying to do with the app? Anything new coming, any features? Maybe a little bit about the leaderboard as well, which I love, as well, the website. But yeah, anything we could talk about?
Yeah, definitely. So our main focus is to continue integrations. So we should have FTX US and Coinbase Pro in the next few weeks. We also are looking into now giving you the ability to add your checkings and savings account. So that way you can also add your bank balance. So you can see that in proportion to all of your investments. And then we are adding share features. So features so you can easily share your portfolio and your best performers with your friends and give them a quick glimpse into your portfolio without actually sharing the dollar amount. But again, we want to build this product for all the users. So anything that all of you have in mind after using the product, again, send them over DM, and maybe we do that spaces next week where we can gather user feedback and use that as a way to shape the roadmap.
Definitely, I would love to do that going forward. And that is something I do want to stress as well. If you use this app or anything like that, this isn't something that, like I said, I'm just getting paid to promote it and I'm never going to talk to. Again, I have constant contact with Matthias. We're always talking about ways that we can change and whatever it needs to be go into stuff for Asset Dash, the app, the website. So feel free to message me as well as you're using it. I did pin the tweet up top that you can get into it. The link is up there. It's on both Android and Apple. But yeah, let me know what everyone thinks. This is definitely something that I found extremely useful. Matthias, I am a huge fan of the website and the leaderboard. I think it looks so clean, and I'm excited for us to keep going with that. But yeah, man, was there anything you else wanted to add?
No, final thing is everyone have a great weekend. And I also see Wall Street Memes is in here as well. Shout out to them and the awesome NFT giveaway they did with us this week. We're doing NFT giveaways multiple times a week on our page, so follow and you'll find out more information on that. And we have another one in the works with Wall Street Memes as well. So, yep, we're really excited with everything and look forward to the next spaces and chatting more about the product.
We love the Bulls.
We love the Bulls. We do love the Bulls.
We love the Bulls. All right, Ramp. I know I kind of got you up here just to chill. I'm not sure if you're able to speak. Are you? Emote if you can.
He only speaks in bull markets.
We got bear market Ram Capital up here, but honestly, if you don't know Ram Capital, I am a huge fan of him. Definitely a great, funny Twitter account to follow. Some fantastic stuff on there. And like Matthias, like Asset Dash said, make sure you are following them. Check out Asset Dash. We're gonna get some cool tweets going. Hey, maybe in the future, maybe I tweet some stuff from that account in the future. We'll see. Gavin, I see we got your requesting up here. Yeah, I appreciate you, Matthias. For everyone, check out one more time. Check out Acid Dash. The link is up above. If you have any comments, any thoughts, anything like that, you can definitely DM me as well, and I will 100% be in contact with everyone there. And make sure you're following the Asset Dash account. Thank you, and then Gavin, I see we got you up here.
Yeah, what's up? I haven't been a while. Over an hour now.
Dude, yes, man. It's been too long.
Yeah,
some may say. How you doing, man?
Did I miss something? Did I miss the spaces?
Yeah, we are past the wrap ups.
Yeah,
past the
I went to
promo
get
for
some
the
food, so
amazing
I was
app and
hungry
parlays.
after the beer market we had.
Gerg, though, let's hear it a little bit. I'm down for chilling. I'm down for doing whatever. First of all, we're gonna do a little bit of an intro, a wrap up, and everything in one. But tell me how your week was in the market. Tell me what we're watching. Tell me how you're feeling. Anything like that.
So far for me, right? I think SPY goes down under 4 or 5% at least. When SPY is down 15% from this all-time highs, that's when I would like to start buying the dips. Other than that, I do like some growth names, but I do feel like they can pull back another 20-30%, right? So for me, I don't like to time the bottoms. For me, I'm happy missing the first 5 or 10% of a run up or reversal, then to hold the equity that's on a downtrend and go down another 50% with that, right? Rather be late to the party and leave early. So other than that, I made one trade this month. No, I traded one equity this month. It was a SPAC. I was shorting the volatility on the options for that. Other than that, I did nothing. But so far, I'm down for the year. I'm down, I think, 0.5%. But I only traded one equity that had downside protection, so I haven't been buying anything so far. But I do want to buy some growth names, but the equities I own for my long-term account, they're down bad so far. Like I'm big in Palantir, it's down from its highs a lot. I own some PayPal that's been getting smoked. But I think all of these large caps, mega caps were down a lot to the right. Shopify 15%, insane. Amazon down 6%. Holy. But with Amazon, right, I will buy the dip on Amazon after next earnings. And for me, right, I like to track the credit card data spending and the month-to-month traffic of websites right in the app. And for Amazon, it's not looking great. And if you look at the Amazon move after the earnings, last 7 earnings, Amazon was red. The earnings, after the earnings, right? So expect a similar move, and that's when I would love to buy some Amazon. And I do hope so they announce a split soon. The last quarter wasn't great, and that was the new CEO's first quarter. And if the second quarter isn't great, so but there has been some chatter, right? They've been spending too much capital into AWS, and like I actually want them to split AWS and Amazon into two different businesses. So I think like that's something very very interesting. That's something possible in the future, right? Like split into two divisions. Amazon, they own Whole Foods and all of the investments. It could be the other startups, could be Rivian, could be the self-driving vehicles that they sponsor right now. And AWS into a completely different entity. So I think that can help boost Amazon stock price. But in the near term, I think the stock split might be the best catalyst for a split. I know almost everyone here has been waiting for one for over a year, but I'm confident you will have one soon.
I can't lie. I feel like it's because everyone has been waiting it for the year. I just don't see it coming. And it's definitely pessimistic. It's definitely the thing of like, everyone's been saying it. All right, I need to be shown it as opposed to be told it. But yeah, that's definitely where I'm at.
For me, right? Like for Amazon, I would only buy equity. Like I don't care, right? Like Amazon at this price, I ran my models. I think Amazon can easily be a $8,000 stock if they can deliver upon the promises and expected guidance in the next 4 years. So I don't mind bag holding Amazon at 3,000, 4,000. So Like Amazon, I would think I would use that as a bank account for a year at these prices. And did you guys see crypto right now? Like everything is crashing, I would say, right? They're crashing like 20%, but we are down almost 50% right now. Like CRO, Ethereum down 10% plus. ADA was tanking too. Like if you go and look at the top gainer list for crypto, even the top gainer list is red. So like when you see the top gainers being red, you know it's bad.
Well, you can't spell crypto without cry, and I said this a little bit earlier. It was always a nice thing when I would say, "Oh, why can't the stock market be open on the weekends?" And everyone would say, "Oh, Bitcoin fixes this." Well, we'll see how we
Yeah,
do
man. Are you
on this and
still
every other
in
weekend.
Ethereum? I know, right?
Yeah, I'm
You were
still in
bullish on
Ethereum.
Ethereum.
My
But
second
isn't your
largest holding,
average
honestly.
like crazy low, like 300, 350, right?
Yeah, dude, it's hard to tell. Asset Dash actually helps me. The feature's coming soon to see that. But yeah, I have a couple places where I bought around 200. A couple places where I bought around 800,000, 600 in that area. I think it has to average out around safely. I'd say 500 if it's totally lower.
Ah, so you're doing pretty good. Even if you go down another 60%, you'll be in the green. So
Yeah, I'm chilling.
yeah. Yo, I have a question for Wolf and you, both of you. You guys
Oh
do
wait,
so many spaces. How can someone keep track of them? Like
I
it's
was
kind of too much.
waiting.
Yeah.
I would
Like
have
how
bet my
can someone
life
who's
that was
down
coming.
or not that smart keep track of that?
I
Like
love it. I
imagine you
love
made
it.
a calendar that's easy, that's one click.
All right, Gary, we got this. Yeah, we love it. We always give use this opportunity to get in there. I think this will be the third one in here, the minor one. We got Wolf gave us a second one in his wrap ups, but we'll kind of end the spaces here with this one. No better way to end the week, to end the spaces, to end everything like that without a nice short Google Spaces calendar shout out. Wolf, the people want it. By people, I mean Gerg. But yeah, dude, give it to us.
Yeah, rip my DMs. Let them flow. Uh, you've heard it if you've been in here. We said it a little bit ago, but again, we did 18 spaces this week. We had tens of thousands of people tune in, hundreds of thousands of people listened to the replays. If you want to know when every single space is, not just for this coming week, but for the entire future, the single best tool to find that is being on our free public Google Calendar. All you have to do is DM either myself or Stock Market News. Just click on our profile pics right now. Go in there. You'll see our DMs are open to anybody to DM us, and we'll add you right onto the Google Calendar. All we need is your Gmail. That is it. It is a simple tool. It is free. It will always be free. Our goal with this is just to bring, everybody as much free knowledge as possible. We're not the experts, but we have great connections to people that have decades of experience and a wealth of knowledge that they're willing to share for free in public areas. So we love asking the questions and getting people onto these spaces. So once again, just shoot over that DM. We'll get you on the calendar. Easy peasy, lemon squeezy. There's a lot of people on that calendar. We're coming up on 3,300 people on it and growing quick. So love to see it. Thank you, Gerd, for the opportunity, for that shout out. And if you're not already on it, hit us up. And then, of course, just make sure you're following ourselves and the speakers up here, because that way, once you come in, the space will show up at the top of your timeline.
Perfect. Thank you for that, Wolf. Amazing as always. You could DM myself or the Wolf account, and we will get you on that right away. You know what? I'm going to say DM myself, and I'll get you on there. We'll save Wolf a little bit of time in his DMs. But yeah, we're going to use this to
Nah, bro,
finally
I'm
end the
offloading. I'm offloading
spaces.
to Joey.
Oh, I love. Okay, well, hey, listen, I'll save Joey a little bit of time. I'm a big
Yo, just
Joey
hire
fan.
you and Ton, Wolf.
What'd you
Evan,
say?
I got you, boss. You're a busy man as well, so let me do what I can. My time to shine here in these DMs.
I appreciate you, dude. Well, listen, we'll get you on there either way. Send both of us a DM. Make sure you're following all the speakers that we have up here. A bunch of people have kind of cycled in and out here. We even got a Ramp Capital quick shout out coming up here. He didn't speak, but he did come up here and chill for a little bit. One last time, follow Bullish Rippers. Myself and Gav are doing a lot of really, really cool things around that account. I tweet out every single post from there. So hopefully, that means it's good tweets, or at least you think that I think I'm posting some funny memes. Make sure you're checking out Brad, an amazing long-term investor. We're doing some really, really cool stuff with going into the future. Gergavin, a funny guy, great short-term trader, great swing trader. Really fun on spaces, always doing this stuff as well. Gav, Wolf Financial, the Spaces King. Did 18 spaces this week. That's crazy. As Brad said earlier, it's not easy to come up here and command a conversation and keep it going, especially when you're doing it 40 hours in a week. So that's a huge, big shout out to him. Make sure you're following that account. Follow Joey, who's definitely supporting us a lot and allowing us to really make this content and be on here as much as we are. And I just want to give one more really big shout out to all the listeners who came in, listened, got some value out of it. We feel really lucky that we're able to come up here and chill and do whatever on Spaces and give our thoughts. And there's people on the other end of it who hopefully I think are getting some really good value out of it. I know based on all the speakers that we have up here, you must have gotten some fantastic value from it. Overall, don't panic. Chill out. It's the weekend. You get some of your best work done on the weekend. I personally do. But sometimes the way the market is, it's not a bad thing to just relax, chill, get away from it all, and come back refreshed. So with that, one more time, I appreciate everyone for coming in.
Broke 36,000 for the first time in 6 months.
What was that?
Bitcoin just broke under 36,000.
Perfect. I'm going to end the spaces right now and get a tweet out quickly saying that. But appreciate you guys. Everyone check out our speakers one last time and have a good one.